I've raised tens of millions of dollars myself, as well as, we purchased just in 2022 alone. I was a GP on over $120 million worth of commercial assets. We don't want to say anything that might get us into trouble. I'm an entrepreneur first, so I'm out there to educate. It started going down. You started seeing some people get in trouble. But all along the way, on that rise up, he's suing anybody because they've been getting their returns and everybody's been crushing it. And even if you're a terrible operator, you've still been crushing it because the market saved you and nobody's getting sued. So it's all good until it's not.
Welcome to Funds on Fire, the podcast that ignites the passion of investment funds and capital raising. Here we turn the complexities of fund management into clear, actionable steps that drive results. I've invested into diverse real estate across the United States and managed thriving funds, and I'm committed to transforming lives through the vehicle of investment funds and helping others to do the same. Join me as we document the journey of scaling businesses, raising capital, and impacting tens of thousands of people around the world. My name is Devin Robinson, and welcome to Funds on Fire. On this episode of the podcast, I actually interview Seth Bradley, who is an SEC attorney and has become a really good friend of mine. So him and I met a couple years back at TribeVest, we're part of a mastermind for capital raising and fund launching. And then both of us, as we've become friends, as we did this podcast interview, a couple of months ago, and then now I've launched the podcast. And even since then, this is pretty cool. Him and I have actually started a partnership on helping people to launch, manage, scale, and raise capital for investment funds. And it's something really cool. And so you'll hear more about that later, but it's really cool that it started with this podcast. We both are very like-minded people. We both have very similar goals and desires, especially when it comes to capital raising and the access to information with when it comes to that, and for other people to be able to learn how to honestly be able to launch and scale an investment fund. And there are so many people that have the ability to do it, have the skills and the knowledge to do it, but don't have the opportunity to do it, or honestly just think it's too hard to do. And so I'm so excited because partnering with somebody like Seth is incredible. He's a guy who has helped hundreds of people to launch and manage their funds, or just really launch their funds. He has raised hundreds of millions of dollars and invested into hundreds and hundreds of millions of dollars worth of real estate himself. And so to be able to partner with him on something like this is really, really awesome. So I'm excited for that as we talk through his journey, talk through all the things as we go through his progression from just being a real estate attorney to then an SEC attorney that goes and helps people to launch and manage funds, his involvement in that, some of the things he's doing. And honestly, it's going to be a really good conversation for you all to hear how to stay compliant, how to make sure that you guys are raising capital appropriately, how to make sure that you guys aren't going to get in trouble with the SEC because of how you guys are raising capital. So excited for this, really pumped for this episode. Just thought I'd give you a little preface before we dive in. You are going to want to listen to this because he is awesome and I'm excited. So thank you so much. Enjoy the episode. All right, what's up, and welcome to this episode of Funds on Fire. I love this because today we have a friend of mine, Seth. Seth, we go back, I don't know, like at this point, I feel like it's like 2 years now, or a year and a half. We met at TribeVest a while ago, and I'll tell you, I was super impressed by this dude because we met at a bar. We were like at this event.
Don't hold that against us.
That's right. That's exactly right. We were at this event for TribeVest, and like I'd gone downstairs. He was chilling. I was chilling. We started talking, and I was like, I like this dude because one, he's not like the typical like white dude that's here. He's all tatted up. He's really cool. And then I realized he's by far the smartest in the room. And I was like, yo, Seth is the man. So Seth, I would love for people to tell, or for you to tell people like who you are and what you do. I've enjoyed keeping up with you over the years. Content you're putting out is incredible. And so if you haven't, give this man a follow, especially if you want to stay compliant with funds and the legal aspect of it, because he's doing some really awesome stuff. And I love how just like fit you and your wife are. That's pretty cool too. So I respect that too. So Seth, like, man, tell people who you are, where you're from, what do you do? Because I think it's going to be important for people to know you.
All right, man. Devin, I appreciate that intro, brother. Yeah, it was great meeting you back in the day. Now we've kind of followed each other on social media and kept in contact and loved it. Love it, man. Love it. Yeah. But I'm a securities attorney. So anytime you're raising capital from passive investors, you can get me involved. I've got the pedigree. I worked in big law for 7 years before starting my own boutique law firm. I think what people like the most about working with me is that I actually come from the business side as well. Yeah, so cool. I'm a syndicator and a fund manager myself. So I've raised tens of millions of dollars myself, as well as, we purchased just in 2022 alone. I was a GP on over $120 million worth of commercial assets. So I come from not just the legal side, but also the business side. And I look at every single deal like, whether I'm, actually an equity holder or I am just the vendor as the securities attorney, I look at the deal like, hey, how are we going to get this thing done, right? A lot of attorneys kind of get in the way. I don't want to get in the way. I will tell you what the risks are, what your liabilities are, what you might be opening yourself up to, what the gray areas are. But at the end of the day, you're the business person and you're the entrepreneur, so you make the decisions based on the information that I give you. So I'm there to help you get the deal done.
That's cool, man. Because I know, man, there's a lot of misconceptions about funds, and so. One, I could tell you, I really appreciate you because I have had some not so great SEC attorneys that I was not a big fan of. Then I've had some good ones, and so I'm thankful for it. And so when it comes to that, we're gonna talk about compliance because that's super important. But we'll also talk about because I guess. So I'm in another mastermind. I think I was going to bring this up a little bit later, but I'll bring it up now. And I want to talk about the importance of finding a good attorney. Because I'm in a different mastermind and it's more of an operators based mastermind, like a lot of single family things. And I talk to people and I'm like, because I'm going to set the groundwork for this podcast, but I talk to people and they're like, oh yeah, I've got some friends. They've let me borrow some of their money and I'm just using that money. And I'm like, oh, hold on. What do you mean? And so I talked to I can't tell you the last I was there 2 months ago. 3 people told me this, Seth. 3 people. And so they were like, yeah, so I have an LLC and they wire the money into my LLC account. It's like 3 or 4 friends. They wire this money into my LLC account and then I use it and I give them a return. And I'm like, you need to call an attorney right now because you are literally violating securities law. Like you are. And they're like, wait. Okay, but what if they say we sign up, a promissory note, they put it in here and I'm like, security. And then they're like, okay, but what if the people hold it in escrow, our attorneys hold it in escrow? I'm like, security. And so just to even set the groundwork, what is a security and what do you see most often when people come to you and they're looking for an attorney and they're like, hey, I'm doing this. Is this legal? And you're like, no, that's not legal. But what do you see? What is a security and what is a misconception or the mistake that you see a lot of people make when they come to you?
Yeah, I mean, you just said it. So the number one problem or the biggest problem I see every single day is just the lack of knowledge. Like people just don't know. And there's maybe a fine line there between not knowing and not caring enough to know. Yeah. Right, exactly. You're like, I know I'm doing something here and I don't care to look into it a little bit further to figure it out. But that's really what it comes down to is just not having the knowledge because you think I'm just going to, me and this guy are going to partner. He's going to give me all this money and they're not going to do anything and they're going to expect a return on their investment and all that kind of stuff. And it's all good, but it's not. You're getting yourself into issues. To define a security in layman's terms, I like to just say, look, if you've got a passive investor involved in your deal and they're expecting a return on their money and on the actions that you're taking as the active participant, then that's a security. And that's it. Like if you have a passive investor, meaning they're not, making decisions, they're not managing, they're not helping you out on the active side, that's a passive investor and you're probably dealing with a security.
Right. And this is what I think separates syndication from the fund, right? So if you have a syndication and then you have somebody who brings the capital, typically they're making some of the decisions, which makes them a little bit more active. So then it's not in that sense of violating that securities laws if it's either one person or even a group that's actually making decisions on that. And I guess that's not the main differentiator between a syndication and a fund, but I think that's where people get confused is the passive part of things.
That's right. That's right. It's the passive part of it, right? You have people that come in, whether it's a syndication or a fund, if they have some sort of managerial rights or meaningful voting rights, because you'll see if you invest passively in a deal and you read through the PPM and the operating agreement, you'll see that you really don't have any rights to make any sort of decisions. There might be some convoluted way that you might be able to get the manager out if A, B, C, D, and F happens, but probably not. So you'll see that you're really passive, right? And if you're passive, then that's a security that you're dealing with. You're investing in a security.
Cool. That's cool. And I appreciate us setting that groundwork because I want people to listen to this. I want people in my mastermind to listen to this. I want people to just hear and understand that more oftentimes, more than you think, there are people clearly violating SEC, securities law. And so I just want to make sure that people are compliant. And this is you mentioned it earlier, and I think that's really important, is just the lack of education side of things. And you and I talk about that. We talked about this before this of really there's only 2 main educators in this space that are doing this. And unless you know those two, you run the risk of not really being honestly educated enough to run a fund unless you have the self-education side of these. And so I love like what you're doing and the content you're putting out, especially from a securities attorney aspect, to be able to help that. What have you seen has been like the main sources of education? Because even just like outside of what I do, outside of what you do, are there other sources of education, since you've been in this space longer than me, that people can go to gain more information about what it looks like to raise a fund or even start looking in that direction?
Yeah, dude, it's tough out there, right? Like you just said it, and I'll just name him. I mean, Hunter Thompson has some really good content that he puts out. Love Hunter, super intelligent guy, great stuff. It's about raising capital for real estate specifically, which is great for your audience. And then Bridger Pennington, of course, his is a little bit not necessarily real estate related, more in the private equity space, but also real estate sometimes. And those are really the only two guys that are putting out content. Typically before them, you're really getting your education from your securities attorney that you engage with. You know, that can, you know, they're going to give you legal advice. They're not going to give you kind of like, you know, they'll review your marketing materials and things like that to tell you, hey, this is compliant, this is not, maybe this is what you should do, this is what you shouldn't do. But there's not really anything comprehensive out there where you put the whole package together when you're really trying to start a capital raising business, other than those two guys right now. So, you know, there's a lot of room in that space for people to step in and do it. And also, you know, securities attorneys, if you look, I mean, there's only a few of us putting out any kind of content because, you know, as an attorney, most of us are pretty conservative. We don't want to put ourselves out there. We don't want to say anything that might get us into trouble. You know, I'm an entrepreneur first, so I'm out there to educate.
Well, and that's what I was going to ask. So for you, man, just like a little bit about your journey, because like it's not every day that you meet a securities attorney. Now, granted, we were at a fund event, so then like, of course, you're going to run into a securities attorney. But like, honestly, I feel like, and this is kind of cool, I feel like me and you don't fit the molds of our role. Like for like, we're tatted, like, you know what I'm saying? We're tatted. We're a little bit more laid back. I think I posted this the other day. I graduated college with a 2.3 GPA. Like I just am not very qualified of what you would put the normal qualifications of a fund manager would be. But for you, how did you get started and like what drew you to securities law? Because it's a very specific niche to be in.
For sure. Yeah. And I really got started in real estate law. So I was always drawn to real estate. I just knew it was a great investment. I've just like intrinsically loved real estate. I don't know what it was. Like even when I was an undergrad, I was like, man, it would be so great to own these townhouses that I'm living in, like things like that. I've just always been attracted to it and investing in it. So I started investing in it myself. I started out doing real estate transactional law.
Oh, cool.
From that perspective. And then I realized that, you know, raising capital was a little bit more sophisticated. I liked that aspect better and started gravitating towards that and got into securities law. And again, at the same time as I was doing that, I was also starting to syndicate my own deals. So pretty interesting that I got kind of the legal side, got the business side going at the same time. So it gave me really good perspective.
That's cool. So you talked about your journey a little bit. I loved like diving into that journey because you said that you were in on some of your own deals. So you started as real estate attorney, chopped that, like started doing that. Were you like a closing attorney?
Yeah. Yeah.
Okay. So like a closing attorney, and then did you get to a point where you're like, yo, I see all this money that people are making. I kind of want to do that. Is that how it like switched into you becoming an active investor into real estate?
Yeah, somewhat, man. I mean, I took kind of the traditional route of real estate investing. I read Rich Dad, Poor Dad. I started listening to Bigger Pockets, the Purple Bible. You know it, man.
That's what it is, man.
Yeah, did all that and house hacked into a duplex. I mean, that was my first property. Started fixing and flipping a few properties. Still own some single family, those sorts of things. And
now
then
you're in San Diego, right?
I'm in San Diego, yeah. But I'm originally from West Virginia.
West Virginia.
West by God, Virginia. That's right.
All right. I mean, like, I feel like if you're from there, you would say something like that. That does make sense. That's the saying. That's what we say. West by God, Virginia. No, I don't know anything about West Virginia, but now I do. So now, do you own some of your properties in two very different markets, West Virginia or San Diego? Is that like where you own them, or are you in other markets?
They're all over the place. So like I lived in Charlotte for a little bit, like, you know, so I own a couple of properties there. I own a property in West Virginia, that duplex that I was telling you about because I moved there for a job. Nice. Really, you know, California is tough, like to make anything cash flow. There's some ADU opportunities right now for that, but really just own the house that I live in. Then I have a condo that I rent out up in Orange County, and that's about it. But the other ones are all kind of all over the place. Like we invested in Cleveland for a little bit as well.
Oh yeah, some multifamily stuff in Cleveland.
That was kind of in the single family phase, but as far as like the multifamily, the retail, a lot of that was like in the Midwest, in the Sun Belt area, so all over the place. And we did like industrial, we did retail, we did multifamily, all sorts of stuff, man, on the commercial side. And
it's good to know that background for you, like not that background, but like you had the ability to understand and how to structure some of those deals. And so I'd love to talk about the structure of funds a little bit, because this is, I'm going to ask the question that I think like everybody wants to ask an SEC attorney about the difference between a 506B and a 506C, and then what constitutes like having that pre-existing relationship, right? Because like if you have a 506B or a 506C, there's certain stipulations, but those are the two most common, right? Like 90% of funds are 506Bs or 506Cs. And so, and if I'm wrong, just let me know. But I believe that's like the statistic. And with those, what constitutes the differences, and then the pre-existing relationship part is one that a lot of people have questions about.
For sure, man. Yeah, you're spot on so far. I mean, 506B, I like to remember by buddy, so it's typically going to be a buddy, right? Like, you have to have, so the rule isn't that you have to have a pre-existing substantive relationship. The rule is you're not allowed to solicit or advertise. That's the rule. And the way that you show that is by having a pre-existing substantive relationship with those investors. So that's a little bit of a nuance there. The rule is really you can't solicit or advertise. You can't go on Facebook and talk about it. You can't take out Google ads and put it out there. You can't even talk about it really to strangers and invite them into your deals. You have to have that pre-existing substantive relationship, because otherwise, think about it, well, how would they know about your deal if you didn't, right? Like that's kind of the mindset there. So but the advantage there, of course, is that you're allowed to bring in 35 non-accredited investors. So that's why people go with the 506B route. Number one, you can bring in a limited number of non-accredited investors. Number two, there's less requirements for you as the fund manager or the syndicator, the capital raiser, on proving if they're accredited or not, because they just self-certify. So those are really the two big reasons you would choose a 506B versus a 506C, which you can remember that by community. So it's a bigger pool of people. All right, it's a 506C for community. Those folks, or when you have that exemption, then you can go out there to your community, you can solicit, you can advertise, you can put it on Facebook, you can put it out there in your mastermind, and go speak on stage and say, hey guys, come invest in my deal. You can do whatever you want, really. It gives you the freedom to operate and not feel like, oh, am I doing something wrong? But obviously the big thing there is accredited investors only. So if you choose that 6C exemption, you're only allowed to bring in accredited investors, and you're also going to have to take reasonable steps to verify that, and that's typically through a third-party vendor or through that investor's attorney or CPA that's going to write them a letter that says that they're qualified.
Yeah, which typically, and not typically, but like this is why you see even older, more established funds go with a B, because it's easier to just bring them in, so they don't have to do all that stuff.
Yeah, what you see is they'll do a 506B, but they won't allow non-accredited investors in. So it'll be 506B, but only allow accredited investors, so that they don't have to, they can self-certify. Yeah.
Which just makes it just a whole lot easier from a paperwork standpoint. So then which is really, really interesting. So for me, and I'm going to just dive in a little bit deeper, because there's so much gray here, and like it's fine if you don't bring any like clarity to the situation, but there's so much gray here, because I hear people that are like, all right, now when you meet that person, add it to your calendar that you met that person, and then you could talk to them 3 weeks later, and then you could pitch your fund to them, and then now you're showing the SEC that it's a pre-existing relationship, and then it's like, well, where the heck is the line if there isn't even a line? And then it's like, then what does the SEC expect me to do? You know, like if somebody introduces me to somebody, how the heck do I make sure that I'm compliant in that relationship that we have, if I know that they even come into the relationship interested in what I'm doing?
I want to take a quick second to talk to you guys about something that could completely change the game for you if you're serious about launching and scaling an investment fund. If you've ever wanted to start a real estate fund, private equity fund, or syndication, but didn't know where to start, this is for you. Fund Founders is giving you free access to Foundations 101, a step-by-step course designed to help you to structure your fund the right way so you stay SEC compliant, raise capital like a pro even if you don't have a network yet, scale your fund without constantly chasing investors, and avoid costly legal mistakes that could shut you down. This is the exact roadmap successful fund managers use to launch, manage, and raise capital for their funds without wasting time or money. And the best part, it's completely free. Go to fundsonfire.com/founders or click the links in the notes to get instant access to the Fund Foundations 101 course. Don't miss this if you're serious about raising capital and growing your fund. This is where you start. Again, that's fundsonfire.com/founders or click the link in the notes. Now let's get back to the show.
Yeah, pre-existing actually just means pre-existing the offering. So pre-existing your syndication, pre-existing your fund. So that makes it a little bit difficult when you've got, let's say, an evergreen fund, right? It's like, well, you've got that offering open forever, right? So you can't even bring anybody in after you've opened it that you don't already know. But there is a kind of a loophole, I'll call it. It's not really a loophole. It's actually a regulation, but you can actually convert a 506B to a 506C now. You didn't used to be able to do that, but I think that passed maybe like 2 or 3 years ago, where you can convert the 506B to the 506C. Now you can't go back after that, but once you make that conversion, get all your 506B investors in if you want to fill that 35 non-accredited pool and then convert it to a 506C, you can do that. And then you can go out and can solicit, you can advertise, you can talk about it, you can bring in strangers.
Yeah. Now that's really interesting too. Well, and I do know that, and I think you just have to close subscription for like 24 hours, right? Or something like that. And then you can open back up.
You really just have, there's not really a time requirement. You'll hear something, you'll hear where there's like a cooling off period and they'll say 30 days, 60 days, but it really just comes down to closing that first offering because it's separate, that 506B exemption offering, and then opening that new C offering. And just to be safe, because again, we're dealing with securities, it's always gray. Yeah. Maybe give it that 30 days to cool off and then open up that 506C and then you're good to go.
And you have to refile like a Form D and everything like that?
You do.
Okay.
You do.
Like
Yep.
Okay, cool. I wonder if your Blue Skies
You can use
over?
the same documents, but you'd need a new Form D, yeah.
Okay, cool. All right, very interesting. So that's cool to know too. So I use a platform, and I think we've talked about it briefly, called Avester, and I'm a big fan because it's a customizable fund. They actually don't, I think because of the nature of the customizable fund, they actually said that I can't close down my B and open back up as a C just by nature of that type of fund. And I thought that was really interesting. And I know you and I have talked about potentially chopping up, like, what the heck is I think I sent you the stuff for it. I can't remember. But
I think so.
Talking about that customizable fund, because it sounds like, there's different fund models. There are the Reg D 506B and Cs. There's Reg CF, Reg A's. And then you also run into like syndications, and then you have fund of funds, right? And so it sounds like, and for you, you've kind of done all of them, I think.
Yep. Oh, yeah.
But right now, you're really focused on one major one, right? Is that what so the fund that you currently operate and you're running? I'd love to hear a little bit more about that.
Yeah, for sure. So just to comment on the Avester fund, it's a kind of a new product, right? The customizable fund, it's pretty new. It hasn't really been tested on the legal side quite yet. It's pretty complicated, right? Complicated from, what it spits out is simple, right? They say, hey, you create this evergreen fund, and then you get, each investor only gets 1K1, even though they might be invested across a bunch of deals, things like that, which is great. But you lose that flexibility. So I don't know the intricacies of it, but you can imagine you've got this customizable fund that's invested in, let's say, 10 different other deals or whatever, and some of them it's acting as a fund of funds, some of them it's acting as a lead sponsor, all these different things. So trying to convert that to a 506B or a 506B to a 506C, I can see where you can run into some complications there, and it might not be possible.
Yeah, and I think so, because the structure of it, they tell me what makes it customizable is the fact that our investors can log in, and I don't actually, I have an overarching PPM. They log in and they choose their investment that they want to. I'm not telling them the investment that they have to invest into. They read the deal disclosures and decide that that's what where they want to allocate their money to, which allows for the customizability of this type of model. So I think that's where converting it to a C would be, what you're saying.
Yeah, for sure. Cool. Yeah, that's kind of the defining, I guess, piece of that customizable fund is that investor actually gets to pick and choose within your fund that you created where they invest. And that actually, I can see why they do that. I mean, it's a great concept, but also that keeps you from actually making any decisions as the fund manager. So that keeps you out of some certain regulations.
I'm like, hey, this is what we offer.
Yep.
You can look at the deal disclosures and decide on where you want, but they could. And this is one of the things that they like is I can say, oh, you could essentially diversify your portfolio within one fund because you could choose this one, this one, but you choose how much you want to go into there. So that is a very interesting model, and so that's really cool. Or like even
the investor chooses it. Yep, the investor chooses it, and I'll that contrasts to what you're alluding to, which is an SPV fund of fund. So that's what we do over at TribeVest. In full disclosure, I'm chief legal officer and a shareholder of TribeVest. So I'm a little bit biased. And Avestor is, we don't like to call them a competitor. Honestly, they do fund of funds, and we do fund of funds is like the overarching product, but it's completely different. One situation.
Which is why I brought it up. It's the only reason why I brought it up, because I'm excited to dive into TribeVest and what you guys offer. Because this is not a pitch for TribeVest, and like I did know I've heard of TribeVest, but didn't even know you were a part of it before this podcast. But I love hearing what you're a part of, and that's why I want to dive into that a little bit, because I think it's cool.
Yeah, and I liked it. It might be good to kind of lay it out, right? You've got these customizable fund of funds out there. Avestor is really the only one offering them. There's a couple other groups out there that are going to be offering them soon. You can actually go to a securities attorney, and they can put it together for you as well.
Really? That's cool.
And then you've got the SPV fund of fund. Again, you can go through TribeVest, or you can go to your
SPV,
securities
just
attorney.
for clarity, special, right?
Special purpose vehicle or single purpose vehicle, kind of either one really applies. And then you've got your typical discretionary fund, which you would go directly to a securities attorney, and that's where you're actually making some decisions. You're saying, okay, I'm going to raise $10 million and I'm going to invest in deal 1, 2, 3, 4, 5, 6, 7, 8. And you're kind of making those decisions. And there's a lot of rules and regulations that you've got to abide by to be able to do that without a license. But anyways, back to the SPV, the single purpose vehicle. Instead of a customizable fund where the investor is making the decision and you as the fund manager are you make all these different things all these different investments available, the SPV is designed as a single purpose vehicle to invest in one single deal. So if there's a target deal, let's say a 200 unit multifamily property in San Antonio, we're going to spin up an SPV for you to invest as a passive investor into that target deal. And that's it. It's super simple. It's super contained. It's not complicated. It just keeps everything compartmentalized, both from an asset protection standpoint and from visibility, right? You're going to know as the fund manager and as the investor exactly what you're investing in, how you're going to get paid, what your projected returns are, and it doesn't really get muddied by other investments.
And this is because I've talked to other SEC attorneys, and they've talked about, it's funny, they've talked about how rare what I've done. So I've like maxed out my 506B on my first fund being a blind fund. And they're like, that's super rare because you're saying, hey, just trust me. But what you guys are saying, what you're doing is saying, hey, this is the specific. And that makes it a lot easier to raise capital because, like you said, ton more transparency. They know what they're investing into. And so for people starting out, that's probably the route that they want to start with, is something where they can bring transparency, and then the investors that they're coming in know exactly what they're investing into.
That's right. Devin, what you did, Devin, was incredible. Like, it's really difficult to do. Most people don't start there. They can't start there. They don't have the ability to be able to build that level of trust and track record prior to you launching the fund. That's why you're able to do it. But most people can't do it. Most people have to get their first few in the door by showing the investors, hey, this is the exact deal that you're going to invest in and you're going to be a part of, and they can do their own due diligence and underwriting and those sorts of things. And they're say, oh yes, I believe in that property or that deal, and I also believe in you as the fund manager or the syndicator. And it's easier to raise capital that way, as opposed to a blind pool fund where it's like, hey, just give me your money and we're going to invest in something that looks like this.
Trust us?
And yeah, exactly.
So I want to dive more into TribeVest, because so where does the benefit come in? Because somebody can just go in, get with an SEC attorney and create their own SPV and kind of go that route. But where's the benefit of somebody coming in and working with TribeVest? Why? I mean, honestly, please, tell me, why have you invested into it? Why do you believe in it so much? And then, tell me a little bit more about it, man.
Yeah, because it just makes everything super simple and super contained, and we handle everything. So if you go to an SEC attorney like myself, I'm going to come in and I'm going to draft your offering documents. I'm going to file your exemptions, do your blue sky filings, and that's it. And I'm going to wipe my hands of it, and I'll say, good luck. More than that, I'll help you out, of course. Yeah, exactly. And I'm going to charge you a lot of money. I'm going to charge you at least $25K. Right. TribeVest includes everything that you could possibly imagine. So all these different parts that you would have to put together as a capital aggregator, TribeVest handles. So that includes not just the offering documents, the legal stuff, the filing of the exemptions and the blue sky filings, but we're going to file for your entity. We're going to get your EIN. We're going to be your registered agent. We are going to onboard your investors. So we're going to act like an investor relations person on your team.
Nice.
So all you do is send us your list of investors and we start reaching out. We send them the docs. We walk them through how to sign and get them through the signing ceremony. We hound them, or we call it herding the cats, to get them to actually fund the deal, because sometimes people get cold feet.
Get
so
your
we
money in.
bug the hell out of them. Yep, bug the hell out of them until they make that wire. We do all that. We do the accounting in your K1s. We configure your cap table.
Nice. Very cool.
We do your distributions. We open your business banking account. We do everything on the back end. We've got the investor dashboard or investor portal that you can use, which alone is, you're going to pay $500 a month at minimum for that by itself. So it's incredible. And we do it at an incredible price. And I mean, we're very transparent about that. It's $5,000 up front and then $2,000 a year annually.
Wow, and that comes with docs and everything?
That comes with docs and everything.
Sign me up.
You can't be beat. I mean, it literally can't be beat.
Man.
And the other thing is the speed. So as soon as you sign the green light docs, which is basically just like, hey, you agree to the services that we're going to provide, we will have you raising capital in 5 business days.
No way,
so
man. That's really cool. That's fantastic.
Yeah. If you come to me as a securities attorney, I've got that hat on. We're not doing it in 5 days. I'll tell you that.
Now, how much education do you help with? Because I tell people all the time, like, here's the questions you should have beforehand, because your your attorney will be the most expensive education you have ever paid for if you don't have that information beforehand. So like what type of, because they'll charge you, like if you don't know if you want a 506B or a 506C, you don't know if you want your waterfall this way, or if you want this, and you're just asking questions, they're going to charge you by the hour to ask those questions. And so for you, like how much help do you guys help for people who are like, I've never started a fund, I'm really looking forward to starting this, but I don't know where to go. What does that look like for you guys?
Yeah, I mean, for TribeVest, we're putting together some modules actually right now. We're going to roll them out literally before the end of the year, which will be fantastic, because we're going to share that with the world. You're going to be able to self-educate on what is a fund-to-fund, how does that look like in the fundraising ecosystem, like, what is a preferred return, what is the profit split, what kind of fees can you charge, all kind of the nuts and bolts that you need to know. We're going to have that out there. So soon enough, that'll be available to the public, and that'll be a huge value add and huge help for us as well, because we don't have to educate one-on-one anymore.
Nice.
As a securities attorney, I will advise on people. I mean, I'm happy. I'm more of a mentor and a coach when it comes to that sort of stuff. And I'll be like, look, attorney hat off right now. I'm going to tell you this, and here's kind of your gray area and that sort of thing. So, I think I get into those sorts of things a little bit more than most attorneys will. But if you go to like a large law firm or even a regional law firm, they're going to charge you per hour, and that's going to be anywhere between $400 to $1,500 an hour.
Yeah, there's no doubt. There's no doubt. So, and this is really interesting, because one of the questions that I had just going into this, and not even knowing about TribeVest and all of that, is what have you seen as far as like trends that you're seeing in the industry right now? Because trends seem to be changing. One, just even I'm a disruptor. It seems like you're a disruptor of industries, and we're trying to disrupt this huge investment fund industry. But it seems like there's different type of offerings, there's different structures, there's different things that people are doing. What are some of the trends that you're seeing that people are kind of pressing against or starting in as far as funds as a whole? You seeing that being the case of become more common?
Yeah, I mean, so like biggest picture, right, is trying to get these types of alternative investments to the masses, because most wealthy people, even rich people, whatever you want to call them, that have some expendable income that want to invest, the only thing they know are 401ks, the stock market, mutual funds, and those sorts of things. And we just need to get that out there. And I think you're seeing a trend towards that. I think bringing in more people that want to raise capital and start a capital raising business is how you do it, right? Because they've already got their built-in networks, and then those networks know other people. and it kind of spider webs out from there. So that's kind of the biggest picture trend, is just trying to see. Well, we're seeing, alternative investments just become more available to the masses. Second, you're seeing the industry go away from the co-GP model, which I like to say the co-GP model is dead, and you're seeing people turn to the fund of funds route.
Yeah.
Because the co-GP model has just been abused. If you do it the right way, if you're actually an active partner and you're actually participating in the meetings and deciding on asset management type decisions, then all good. That's how it's supposed to be. But when you're just raising capital and not doing anything else, that's when the co-GP model gets abused. And it's not just, oh, well, you shouldn't do that. It's illegal. It's plain and simple illegal.
So that was like the conversation. I'm telling you, when I was having the conversation with that guy at my mastermind, and he was like, we're doing this. And I go, like, stop. And he's like, ha, ha, ha. And I go, no, it's illegal. And he's like, oh, ha, ha. And I'm like, no, like prison, illegal. And I feel like just people don't understand the severity, because they feel like, what's wrong with it? It's not that bad. And it's like, no, it's illegal.
Yep. Yeah. And this is just what happens, right? Like, you just kind of, everybody just pushes boundaries. And fortunately or unfortunately, however you want to look at it, the industry's been fantastic for a long time, right? The real estate industry's went up since the crash in 2009, 2008, all the way until really COVID. And that was just a blip. And then it took off again. And then basically up until last year, 2023, is when you started seeing it kind of take a nosedive a little bit because of interest rates, and not because of the actual state of the market, but the interest rates. But either way, it started going down. You started seeing some people get in trouble. But all along the way, on that rise up, all the investors have been happy. He's suing anybody because they've been getting their returns, and everybody's been crushing it. And even if you're a terrible operator, you've still been crushing it because the market saved you, and nobody's getting sued. So it's all good until it's not. And then you've seen and then you see in 2023, you see, potential foreclosures and workouts and, capital calls, things like that. Investors aren't happy, and we're in America, and people are like, yo, how can I get my money back? Well, you try to sue somebody, and that's when you start seeing some of these things where the co-GP model was abused, or people weren't raising capital the right way, or they didn't file their exemptions, all those sorts of legal things that nobody really worried about because everything was great start coming up. And you're seeing that now. So you're seeing that shift away from the co-GP model to the fund of funds model, because the fund of funds model is compliant, obviously, if you do it the right way, but it's more compliant, and it's always been the answer. But at the end of the day, it's expensive, it's more complicated, you've got more attorneys, you've got a whole separate offering, all these different things that you have to take into account, and people are like, I'm not doing that. But now we're kind of forced into having to do that, and that's where, TribeVest and Avestor and some other folks are coming in and coming up with solutions for that.
Yeah, that's really cool. Because one more thing I'm really curious on that you've seen, because I feel like there is a fairly irregulated asset, coming into a very regulated structure, right? So one of the things I'm talking about is like the rise of crypto in these crypto funds and these blockchain based funds. Have you seen that start to affect like the legal landscape of funds and the formation that people have of that, and the way that people are thinking through that, and even how the SEC is starting to figure that out and stuff like that? Have you seen like an emergence of more of those blockchain based funds?
I have, yeah. And not just like strictly blockchain and crypto, but also just spin-offs of that, right? Like you saw tokenized real estate was a big thing for a little while. It's kind of turned down a little bit, but that was huge. That was crazy
that you could be like, I'm tokenizing my bathroom, and when I sell it, you get like that much of the square footage and the appreciation. It's like, what? That's crazy.
Yeah. So it's kind of cooled out a little bit. I honestly don't follow that closely, just because I know that it just changes so fast. And especially now that we've got the new administration in here, you're probably going to see a lot more loosening of that, which would be good for us. But yeah, I mean, you're going to see that, right? Like, because we are just on the precipice of just crazy technological advancements, from tokenized real estate to crypto to AI, like all this stuff is going to, like, this landscape 5 years from now is going to be unrecognizable.
Yeah. It really will, just because of the way that contract law is going to go from I guess blockchain based, like, cause like you'll see that where the blockchain will take a lot of that aspect and change it and flip it on its head. So it's going to be super interesting to see how that goes. Man, I want to respect and honor your time. I appreciate you being on. I guess one more question that I have before we kind of go into the exit. If there's somebody that's thinking about starting a fund, because what you were saying earlier, really there's only two main people. If I'm fully transparent, I want to be able to be the voice of funds for minorities and women in this country, because like all those other, all the white dudes, they can have all the other white dudes. That's fine with me. But there's a huge disparity. I heard Don Peebles once say, and this has changed my thought, my process, like my mindset ever since. He says, in the history of America, there has been $94 trillion to come in through private equity and real estate. In the history of America, 8.3% of that, 1.7% of that have gone to minorities and women. That means 98.3% of that has gone to white men. And so there's this massive disparity between access to education, like you're saying, access to capital, access to, I think there's this quote that says, the world equally distributes talent, but doesn't equally distribute opportunity. And so there's this huge disparity of opportunity of people that look like me and look like you and look like women around this country that I would love to make sure we're the voice for. And so for people who don't have a lot of that education, one, what's a big piece of advice that you would give them and when they're starting to think about starting a fund? Because I think, like, if I'm full transparency, most of the people I talk to, and I told you I saved from prison, they were black dudes that are just trying to do the right thing, but don't have the education to do the right thing. And so for that, like, what's a big piece of advice you would give people that are thinking like, I think I want to start a fund. What should I look out for? How expensive doesn't matter, because we've talked about a better solution for how expensive it can be. But what's the thing that they should be looking out for?
Yeah, I mean, right off the bat, like, be confident and don't be intimidated, because I think some people in those groups that you described might feel a little discouraged because of that. Because you walk into a room that is maybe all fund managers or all capital raisers or, those types of people. And you're like, whoa, I don't look like everybody else. So maybe I don't belong here. Or maybe 100%. Your confidence goes from here to here. And you're like, and then you come off that way, right? Like you got to step into that room with confidence. And a lot of that comes down to self-education, right? Like, it comes from education, and it's out there now. I mean, we mentioned that there's only a few really good sources, but you can still piece it together. I mean, you can find anything on YouTube University just to at least get the, being able to talk the talk and walk the walk and feel confident doing that. So just get educated to start, get that baseline, and then get out there and just be confident. Like I said, don't be intimidated. Don't feel like you don't belong, because we've got to get folks out there that are doing it from those groups.
Yep, that's right, man. Well, I appreciate it. Seth, where can people find you? Where can people hire you? Where can people join what you're doing? Because I think that they should. I'm a big believer in you and what you're doing, and I'm excited for all those things.
Appreciate it, man. I usually update all my links at SethPaulBradley.com, so you can find everything there. I'm all over social media, so all my handles are Seth Bradley ESQ.
Cool, man. I appreciate you. Thankful for your time. Thankful for your friendship. I really look forward to growing together, man. It's fun to see other people that, like, we're about the same age. I don't know. You look like you're in your 20s, but you're not. I know that. But for us to just rise together on this, man. And so I'm thankful for this journey that we're on together, and I appreciate you being here today.
Love it, brother. Appreciate you.
Yes, sir. Talk to you later, man. Wow. I hope you enjoyed that. I have a quick favor. If you've been enjoying the show, there's one simple way you can support us, and it's by hitting that follow button or that subscribe button on the app you're listening to. I want to level this podcast up in every single way possible, bringing you more value, incredible content and guests, and new strategies. Following the show and leaving a quick review goes a really long way in helping us to grow and continue to deliver top-tier content. It's the only free thing I'll ever ask you to do, and it makes a bigger impact than I can possibly put into words. So thank you for being a part of this journey, and I'll definitely catch you on the next episode. To great success and greater impact. Peace.